staff are in listen-only mode.
All right, good evening. How you guys doing? Hey, Reggie, Wendell, hey, Clive, good to see you. Dirk, Sagar, Tyrese, Devon, good, Ann, Sarah, everybody, good to see you guys. Rodrigo, Jeff. All right, awesome, and many more. All right, welcome to 2017. I am very excited about 2017. We did a lot of very, very good things in 2016, a lot of growth. Some of you guys have turned the corner. Those who have been in touch with me and letting me know how they're doing and asking for help when needed. Okay. 2017, we actually will be better. We will try to tailor requests from last year, focusing more on setups, quizzes, challenges, and hopefully a better delivery. Okay. Most of the stuff has been pretty clear. I'm going to try to clear it up even more. And of course, that'll all come with time. You know, the more exposure you have to certain setups, the more you're going to see it, and the easier it's going to become. Okay? Repetition, repetition, repetition. All right, let's get started. Disclaimer as usual, nothing presented in this webinar or video presentation vocally or visually is to be taken as trading advice. All content of this video presentation is for educational purposes only. You know, trading involves risk, so always do discretionary fundamental trading. Awesome. Okay. News. So we know there was no news in London. They kind of had a unannounced news, something to do with OPEC. Oil started moving and the CAD started going crazy and so on and so forth. Of course, it was not announced, so if you were in some trade that went against you, you had to be able to manage your trade quickly and get out of the trade. Okay? So Yellen is supposed to be talking right about now. Unemployment claims with the U.S. session as usual. Tomorrow, same thing. There is no news in London. However, the market will move with retail sales in the U.S. session as well as consumer sentiment. Only if the consumer sentiment, the actual versus the forecast, is a big difference. If it's very small, nothing's going to happen. If there's a significant difference, yes, it's going to move. Okay? But retail sales definitely is going to move. All right? Okay. I'm sure Doug and Jim may have announced. We do have a meetup. It's under announcement calendar. It's in the forum. Okay? Click on it, and the first one over here. All right, so the meetup is on the 21st and 22nd at the Meadowlands Medical Center, and that's in Secaucus, New Jersey. On Saturday, the session is going to be from around 7 p.m. until 9:30. Steve is going to be there on the first day, and the second day, we're just going to do it a little early because the afternoon time is when these Jim and Doug are both sleeping, so they want to do it in the morning. So that's what we're going to do. All right, so one session is late and the next one is early. Okay, Jim wants to go first and then Doug is going to go second. All right, awesome. Here's the two locations. If you want to stay closer to the area where the meetup is at, extended stay is close by. It's in Secaucus. And if you want to stay closer to the airport, Courtyard at Marriott. They have a free shuttle from the airport. You can just grab it and get to the airport, get to the hotel, regardless of what time you get there. All right, looking forward to seeing everybody there. If you guys land up in JFK and staying in New York, then you can just catch a train from New York City. You get off in the Secaucus Junction, and then you just catch a cab from there to the Meadowlands Medical Center. All right. If you guys want to talk about sharing rooms and anything else, just scroll down over here and just write, you know, I'm coming in, I want to hang out, whatever, you can just write down over here, okay? And then anybody else can just come in and check on it. Okay, Tim is coming in with his wife. They're going to be tourists Friday and Saturday, so that'll be great. Looking forward to seeing you, Tim. All right. Let's take a look at some harmonics. Hey, Derek, how you doing, bud? Yep, Lou is going to try to make it. I'm sure Connor is going to come down from Boston, and Derek is coming in from Connecticut. So it'll be great to see everybody. Awesome. All right. Harmonics, EJ. So we were expecting EJ to create a W formation down here and go long. It is moving now, but see how many hours. These are 4-hour candles. See how many hours they're holding this. 1, 2, 3, 4, 5. This is 6 candle. 6 4s are 24. 24 hours. They've been holding this pair for 24 hours. All right. Between yesterday to today, 24 hours. So look at the 1-hour chart. Okay. That's your move. W. All right. I took this trade right there. Okay. So how do you take this trade? It's really simple. You can take it on a lower time frame, but obviously the next lower time frame from the 4-hour chart is the 1-hour chart. That's why most of the harmonic setups, if you notice the patterns on the harmonic, they're best taken on the 1-hour chart. So let's take a look at this, for example. It's kind of interesting right here. So the first harmonic is here. You see this little this wing I'm playing with right now, this wingtip. Okay, that's this spin bar. See, close above the 13, back below, back above. So let's presume I saw this as my first leg, and that's my second leg, right? No divergence though. Okay, there's no divergence in here. So let's presume I took the trade here, going long. It went up 28 pips. Stop goes to break even. I've taken out a break even. It came back down and gave me another leg now. So you got maybe 3 legs like that, right? And then if you, same thing, you just drop the fib, 1/3 pullback. Drop the fib, 1/3 pullback. So the 1/3 pullback is right there. You drop the fib here, 1/3 pullback is right there, okay? You can put pendings, it's fine. See, it went up 28, 29 pips. Right now it's about almost 30 pips. It'll hit 30 pips over here. Okay? Yep. So I'm still in that trade. I know it's been a couple of hours, but price has not closed below the 13. Okay? Yeah, it's crazy, right? Still in that trade for 30 pips. Took forever. All right? So that's how you trade these harmonics. Don't complicate it. All right? Take a look. Okay, maybe not. Here, see? Now, if it's sitting in the middle of nowhere, same thing. If it fires this and you look to the left, that's my first leg, close above 13, back below, back above. Ideally, I want this to close above the water. If it is, that's the one. That's my shift candle. This is not really a shift candle, but if you did take this trade here, you got 20-something pips. That's not a shift candle. Got to shift to an EMA. That started from above the EMA to above the EMA. So apparently there's a little gap in here. Okay? That's how you got to take these trades. Wait for the setup. Wait for the setup. All right? More than 4 candles above it, so that's my first leg. I'm waiting for it to go below the 13, back above, back below. Now this is obviously with the EMAs pointing up, and this is just a disaster over here. It doesn't look nice. This is just a pass. All right? If it's not clean, right? I'm looking for, if it's half a bat, I'm waiting for it to go up and down. It's like up, down, and then the EMA is between here. There's not enough space. It's just ugly. All right? So this I'm just going to delete. And we'll take a look at others. If it's like this, for example, okay? All right, sometimes they'll give you an advanced W. You get 1 leg out of the band, 1 leg in the band. All right? And then if you watch, see? When price closes above the 13, RSI is above the signal line, above the market baseline, there's enough pips from here to here, that's your trade. Literally, it is as simple as that. Don't complicate it. Okay? The pattern got to be tight. The pattern cannot look very crazy. Okay? So this looks like an advanced kind of sort of look like an advanced M, right? No more than 4 candles. So I got 1, 2, 3, and the 4th one closes below the 13. Okay. You got 1 leg out of the band, 1 leg in the band. Short. 50 pips. It worked. I'm telling you, it works, man. You have to be able to see it. You see this little box here, and you see a harmonic here, but there's no M, and the price doesn't close below the market baseline. Don't take the trade. Okay? That's why we always say when you mark a trade and post it in the forum, a lot of guys will ask you what's your setup, because this is how they trade. They trade with no MSU. That means not making stuff up. That means if you see a set and you can say, you know what, that's an advanced M. Why is it an advanced M? Because there's no more than 4 candles above, and I see a 1 leg out of the band, 1 leg in the band, and RSI line confirms on the market baseline cross. That's why it's an advanced M. You have to be able to stand your ground if somebody challenges you. Don't be like, oh, I think it's going to drop. That thinking and doing is something totally different, right? So don't do that. It's moving now, but this was one set we talked about. All right, the next one is GJ. GJ, we're looking for reasons to go long. Okay, you see the harmonic was actually right over here. Here's the wingtip, and then it kind of failed. Now, if you look at the 1 hour chart, there is 4 hour, it kind of looks ugly. So you go down to the next lower time frame and you're looking for a pattern. Okay, so my wingtip initially was right here, right? So this is like this is the previous harmonic in here. So you're looking at this, you're like 1 leg out of the band, 1 leg in the band, not really divergence, okay. Not the cleanest, but if I look at this shift candle with no wicks, RSI line is above the signal line, above the market baseline. I do have 1 leg out of the band, 1 leg in the band without divergence. Okay, 1/3 pullback, and I'm going to go long. I have a pending sitting here. Boom, 75 pips. Now, does it work every time? No, nothing works every time. Like here, it didn't work. Okay, I have a 1 leg out of the band, no legs in the band. I don't have a clean pattern. All right, hindsight, you're like, well, it's like a half a bat, and okay. If it is, then obviously you got stopped out. Okay, if you think that was a half a bat. I'm not a big fan of a half a bat. The half a bat in the direction of the trend is easier than a counter trend half a bat. That means you only got 1 leg. And that on a reversal, a 1-legged move is like sitting on a 1-legged stool. I don't think you can sit on that for a very long period of time before your legs are certain. Okay, so this is a 1-legged stool. Now, if it's a trend move, the stop and then you don't want to come back to the high, that's a different story. It's easier to trade because you're trading in line with the trend. This is a counter trend move. I'm trading into the moving averages. I don't like those. Always a W. Okay, counter trend, always a W. All right, so this is nothing. Nothing happened. Maybe even a lower time frame. Okay, you've said, okay, yeah, that's the W over here. Here's the harmonic. But notice where the box ends. The box ends over here, even though the harmonic is here. Okay, so once it clears the box, I'm not a big fan of it either. All right, we were looking at this at a second leg half a bat. That means we're waiting for price to break above the water after a trapping move. So when they do the little trapping move and they break, maybe over here would be interest. Right, 18, 19 pips, stop goes to break even. Either you got out at break even or -6. That's your move. There is no other trade in here. Right? This is all the dribble stuff is going sideways. Right? Okay, next one. GN was one. Okay, so there was a harmonic in here. That was the first leg. That was many 4 hours ago. So we're looking for a W formation. As remember, this box was very big. As this is dropping, it's still going long. And if you look closely, you're like, well, maybe this is a set over here. All right, let's take a look. I'm going to blow it up even more. There is no out of the band in the band. Okay, there is a sort of like a W looking structure here. All right, ideally on an advanced W, the best move is 1 leg out of the band, 1 leg in the band. But let's say you didn't follow that rule. You're like, well, it looks like a W over there. Forget about the out of the band in the band. I'm going to still take this trade. Okay, so you're going to take this trade here. 1/3 pullback is right here where the 13 is. Okay. 24 pips. Stop goes to break even. What's the worst case scenario? Close below the 13, -11. That's how you got to trade these. Okay. All right. This is an advanced M. 1 leg out of the band, 1 leg in the band. Granted, there's no divergence, but I'm looking for shorts, ideally over here. Okay. Now it didn't confirm. All right. I'm looking for an M where this shift candle goes below the market baseline. That's usually the best move on an advanced M or advanced W formation. Because it doesn't qualify on the 1 hour chart, your next best move is to go to the 15-minute chart. That's how you trade the fractal stuff. Okay? Anyway, let's move forward. So this one, even if you messed it up and you followed the rules and still took the trade, it went up 20-something pips. You remove your stop to break even, and you've taken a scratch on it. A positive scratch, not a negative scratch. Okay? All right. This is a level 2, so your better move is to the downside. So we're expecting what? Stop and high, drop. Okay? On the 4 hour. We're expecting to come up, hit the stop high, roll over and drop. It didn't, straight away drop, which is fine. Happens. Okay? All right. And the last one was dollar yen. This one just happened to be that way, but dollar yen is moving now. If you look at the 1 hour chart, advanced W. Beautiful advanced W. Look at this W. This is what you call a classic advanced W. They'll give you a nice vector outside structure, but it doesn't close below above the 13Y. Because they move so fast, the EMAs did not get a chance to pull in to the candle. But you have a nice outside the band, inside the band, and when the price closes above the 13, RSI is above the signal line, above the market baseline. That is how the structure normally looks like. And that's your move. 60 pips. It's easy. Okay? Just follow the rules. Like driving. You just don't drive on a one-way street going the other direction, right? There are rules. Same thing. You just follow it. This is the result of it. Okay? All right. Next, let's see. What else is there? Look at that one. No. Okay, so we are pretty much done with the harmonics we had this morning. Okay? There should have been no reason why you'd have taken a loss if you just traded these 4 trades today. All right? Okay, awesome. All right. Let's look at the levels on the 1 hour chart. All right, Wendell took EJ and GJ for 55 pips. That's phenomenal, man. Isn't that easy, Wendell? It was right there. Okay, so euro dollar, we were in level 1. We're expecting what? Stop and low rise. It's trying to do a 1 hour 50-50 bounce. Okay, cannot be a safety anymore. I'm no longer at level 1. I'm in level 2 now. So on the 15-minute chart, I'm going to look for a W off the mail. Likely a London trade, likely, okay, because now they're still working on the first leg, okay. So now ADR is met or exceeded. If it was, you're trading a counter trend move back into the range, because you know once they run, it's like 230 pips, right? So that's 2 times ADR, 231. It's 104. 208 is level 2. So I'm in level 2. If it comes out of London and it's straight away up in New York session, that's where you take the T time trade, New York reversal back into the range. Okay, some of you guys did grab this trade. It's ugly, man. Counter trend moves are ugly. All right, there was no trade long in London. All right, CT, I don't trade these. Okay, I trade in line with the trend. That's why this will not interest me at all. Why? Because I would have seen this as an M, valid, right? The valid, and I would have taken a short here, and I have to close my position up there. Okay, so I don't trade these. No CT trade for me. Am I going to miss trades? Yes. Lord knows how many trades I've missed before. But if it's in line with the trend, I won't miss it. Okay. All right, so I'm waiting for them to hit the stop low and then go long. EJ. All right, I would have hit my target. So this is a level 3 move. I know there was a harmonic. I told you guys to keep an eye out for this, and this was really nice. So entry would have been right around there. 1/3 pullback, and your target would have hit 30 pips right there. Okay. Either 1 hour candle, 1, 2, 3, 4, 5, 6 hours, 6 hours. Crazy. All right. What Doug really likes on this trade is the fact that you have a one leg out of the band, one leg in the band, little one right here, right? RS line above the signal line, above the market baseline. So it's like 3 hits to the low. The right leg is the baseline bounce. The right leg is the baseline bounce. That's the beauty of it. Okay? EC, we had it at the potential short, but this was a big level 3. All right, some of you guys grabbed the short. I grabbed the long. All right, so let's take a look. All right, so you guys did grab the short, and it is a half a bat. This was the one where the OPEC news came out, and boom, all of a sudden it started dropping. All right, now in level 3, we did say M's and W's off the Mayo is an acceptable trade. This is an M off the Mayo. Okay, and even if you don't look to the left, look, close below 13, back above, back below. I know some people took this trade, phenomenal. Drop the fib. If it's a big candle, you can wait for a 50% pullback. Here's a 1/3 pullback, right? So you wait for the 50% pullback. Your stop has to be above the shift candle, 5 pips above the shift candle. All right, so your stop loss is 40 pips. Your take profit should be 40 pips. All right, phenomenal. If you're looking for longs, see, here's the half a bat going long, right? Close above the 13, below 13, back above. The distance between the close above and back below, the distance from here to here, if it's more than 10 pips, it becomes a half a bat. So price has to close above the apex, which it did right here on this candle, but now you're too close to the water. All right? So if you do wait for the next shift candle, which is this one, and you measure from here to here, 17 pips, you can take that trade, which is fine. You hit your 30 pips on that move. Okay? It goes 32, you hit your... All right? If you look at the 1 hour chart, and if you take it as a big fat W, it stutters and then it breaks here. That's the one I like more, is because I see one leg out of the band, one leg in the band. But this is my second leg. This is not my second leg, right? So this won't matter to me. Entry, shift, this shift, and then my entry was in this area first, and then the bigger position was in here. Once it confirms that it's going to go long. Okay? Because you put a small position in here, this one starts coming back to us, you don't want to start going long here. Some people do. I just like this to close up, and then when it pulls down here, I'll start entering the trade down in here. Okay? All right, so I am looking for longs. So that's my bias as of right now. All right, big consolidation. Euro Aussie. Okay. The Euro Aussie, I was in level 3. I am still in level 3. I was looking for reasons to go long. All right, so we were right around here. It hit it. You're like, okay, good. I got one leg out of the band, and then this one, you got a beautiful divergence, one leg in the band. And then if you did take this trade here and put your stop, this is my shift candle. I know I don't like this as a shift candle. There's a big wick, so this is not my favorite. But if you did take this trade, your stop has to be 5 pips below here, so you had a step 18 pip stop. You'd have gotten stopped out. Okay, and if you thought, hey, that's one leg, and then this is a W at the 12 setup, and if you see this one again, pins to the high, not a solid shift candle. I prefer a solid shift candle or a hammer. Okay, let's presume you took this trade here again. Going long, you've been up 12, 13 pips. Stop goes below here, 5 pips below this. If it closes below here, you're going to get out minus 20. Okay. Does it all confirm? Yeah, it looks really nice. Angle of separation, everything. So if you did take this trade, it's not a bad trade. It just did not have follow through. Why? Because it's late. Look at the time. When you took this trade, this is 10 o'clock, right? You took this trade on this move over here. By the time 10 o'clock, 11 o'clock comes in, you take the trade, and now you're sitting in this trade at 11 a.m. London is closed. This is what happens normally. It just kind of fades. It goes nowhere. It goes sideways. There's no volume to push it up. The European market is closed, and the Aussie market has not opened. So there is no one, unless it's a dollar or a CAD move. If it's either one of these and there's no news coming out, it's not going to push it. The market, both these markets are closed. Nobody's pushing this pair. It's not going to go anywhere. Just because, like Steve said, just because you're on it doesn't mean the market makers are going to move it. Okay? All right. EN. All right, so EN was very interesting. So if you measure the move off this high, this peak formation high here, all the way down here, it's about 356 pips. Let's say 360. Okay, very close to 3 times the ADR. This is level 3. Now, look at this move. Straight down, right? Boom. Very nice. 1, 2, 3 to the low. All right. It comes back up. It was railroad track, comes back down. If this is one leg, you can likely take this trade back for a second leg. Now, I like it to bounce off the water in level 3. Look at this example. Okay, this is all chop. So some people are like, well, if they into breakout trader, they hit the 50, they hit the 50. You know, nah, I missed the 50 over there, but you know they took this trade. I don't like this part. This is nice because I have one leg. I'm expecting to come back and give me my second leg. See, so this is the induced breakout traders come back, hit the 50, trap off the static, RSI line, signal line, crosses, boom, I'm ready to go. 30 pips. I know some of you guys grabbed this trade. It's beautiful. Like a little, yeah, not really. It got to close back above. It never did. If this one traps it, that'll be like a half a bat, yeah, but that just, there was no closing above. Easy money. Yes, it was. Okay. All right. GU. Okay, so GU on the 4-hour chart, we were looking at, we're talking about it, right? We're like, wait, we only got one leg. We're expecting it to come up, hit it, and come back and give us a second leg. Remember that? In the pre-market, we're in level 3. We only got one leg. Boom, boom. We're expecting, anyway, on the 4-hour chart, we're expecting this to come back down and give us a second leg. Okay? So the best move with a 50-200 cross, and M off the male. Now, if you wanted to take this trade, you could have taken it right there on this pullback of this candle. See the shift candle? That's a nice shift candle. I know there's wicks, but at least the wicks on both sides. It's not like a big wick on one side and then no wick on the other side, right? So the 1/3 pullback lines up right there. You measure from there to there. It's more than 17 pips. Take the trade. Okay? That's an M. M off the male. Now, could you have taken this trade higher up? And the answer is yes. If you go to the 15-minute chart, if it's clean, you can take it. Okay? Close below 13. See, we talked about this like a 12 setup. Blue tracer. When you draw this box, the blue tracer's got to be somewhere inside this box, which it is, right? So if you took this trade, first one over here, wait for the pullback, boom, short, 20 pips, right? Stop goes to break even, and then what? The distance from here to here now is more than 10 pips. So this little one becomes a half a bat. So you have a second leg, half a bat. First leg, second leg, half a bat. Wait for that pullback and you short. Make sure you have enough pips in here and you take that short. 78 pips. It's kind of interesting. If you mark the entry, I'm just going to mark it without the pullback. And if you look at the 1-hour chart, see? is essentially the shift candle, wait for that pullback, the 1/3 pullback, and you literally take the trade in almost the same spot. Remember, on the 15-minute chart, I marked it without the pullback. Yeah, wicked, right? Okay, so anyway, if you're looking for longs, there were none. This was the move. Okay, 1350 cross, little railroad track, long. It was in Asia, you missed it. There was nothing else except for the counter trend move back into the range, which realistically is not. 5200 cross, M of the male. It's dropping. So what are you going to look for? 1350 cross, you're waiting for that ID 50 to the downside again. Okay. GJ. Okay, so GJ, we're looking for level 3. This is really ugly. Anyway, we're looking for reasons to go long on this pair. I think we talked about this briefly, and this was just absolutely horrific. Okay. I think we talked about it with the harmonics. So I'm still waiting for it to close above 13, back below, back above, and then take the trade. GC. All right, so GC was interesting. If you notice, they hit it again, they hit it again, they hit it again. Market baseline, if you notice over here, was moving sideways. It was flat. So if you're looking for longs, right, if off the 1 hour chart, your long has to be when it closed above the 13. So for example, the first time if you took it like that, right, RSI above the single line above the market baseline, wait for the pullback, long, right, boom, 30 pips. Same one over here. Closed above the 13, 1/3 pullback, long, boom, 59 pips. Always with TDI confirmation, RSI signal line cross above the market baseline, RSI signal line cross above the market baseline. All right, that's the only way you know how to manage this trade. Otherwise, you're guessing. Unless you're very advanced on how to trade the extremes with the 1 minute chart. Okay. All right, 15-minute chart. Let's see if there is something at these quarter points. And the answer is not really. There is no one leg out of the band, one leg in the band. It's just not even a shark fin. It's just nothing. Okay. The only one that one leg out of the band, one leg in the band was over here. So you have to wait for it to clear, and then if you took the trade from here, you'd have got paid out. 38 pips. All right. If you're looking for shorts, you're like, hey, I'm looking for M off the male. That means what? That means it's gotta hit the stop. All right. Which they did right here, half a bat. David took this trade. David Major. M off the male. You can trade in level 3, M then W's or shark fin, hold the male. This happens to be a shark fin, hold the male. That means the half a bat off the male. Shark fin, held by the male. That was a good trade. Okay. See, they do it all the time. Now, if this one trapped, it's close enough. This one just trapped and rolled back over, and you got a shark fin, hold the male. RSI line below the signal line, below the market baseline, short. That would have been classic. It would have been perfect. I know some of you guys took this trade here. Okay. Here, the M off the male. Close below 13, back above, back below. Just simply wait for them to close below the market baseline. One leg out of the band, one leg in the band, short. See, M off the male, half a bat, half a bat. Level 3, half a bat off the male. Trap off the lower EMA, does not close, type 2, rolls over, is short. Shark fin, hold the male. 1, 2, maybe 3, 4. 4 trades in level 3, all trading back to the peak of the M and W of the male. It's amazing, right? Pound Aussie. Now, Pound Aussie. Okay, so Pound Aussie was interesting. I took a scratch on this trade, right? So I thought at the level 4, I thought, great. I don't have a one leg out of the band, one leg in the band, but I do have divergence coming in here into this move. It was very nice. Okay, so I'm like, okay, so this from a lower low, this from a higher low. So I was waiting for them. They busted above here. Wait for the pullback. Always wait for that pullback to the 13 EMA and you go long. Okay, I was up like 20 something pips, stop goes to break even. All of a sudden that started coming against me and I closed the position out. Okay, I think when the next candle opened up, it went up, it's not coming back down. I think that's it. The star formation likely is going to form a star formation, a morning star, evening star, sorry. All right, now let's look at the lower time frame. All right, no stop on low. Don't take a trade until it hit the stop. No stop on. Can't take that trade long. When you're trading the 1 hour chart, you don't need the stop on. You're just trading the pattern. If you're trading the 15-minute chart, you got to wait for that stop on. Okay, that'll help you out tremendously. All right, GN. Other than level 2, I was looking for reasons to go short, not long. I wasn't too short, potentially. It was actually in a level 3 situation. It was just this wide 3. But let's presume this was a 3. All right, let's presume we're looking for long. I think we covered this already. You would have taken this trade right there, goes above. You would have been up almost 20 pips. Stop goes to break even. You would have taken out a break even. Okay, not as clean. No out of the band, in the band. Okay, there was divergence though. All right, they did hit the stop, but there was no pattern coming in here. All right, unless you thought this was a big W pattern. That was a multi-structure W pattern. And if you took the long from here on the little pullback in here and went long here, you'd have hit your 30 pips. I think some of you guys did take this trade thinking it was a level 3. Then, of course, when it busted through, you're like, okay, so it's not a level 3. It's a level 2 with a potential reset. Okay? I redrew the levels on that one. GF. We had a one leg. We're expecting price to come back down. Remember we were talking about that? And price had to break this box. So we drew this box right on the top there. Price has to break it with a beautiful shift candle in order to go long, making this the half a bat, which it never did. So we're expecting this to come back down to give you a second leg. Okay, if you were thinking, hey, I'm looking for shorts and you're looking for M of the male, it really did not reward you. Close below 13, back above, and then it just goes sideways. Looking really ugly in there. Okay, the clean move was right there. Boom, that was the move, but that was way too late already. All right. All right, these will be a little bit faster. Aussie dollar, level 3, we're looking for shorts. It did something like an M, but it was, again, counter trend, and then level 3, it's the trend move, but it's the counter trend, and then counter trend to the trend, you're trading to the 50-200. Here the M, close below 13, back up, back below, and then it just goes sideways, and then it drops. Okay. Quarter wood. AJ, also level 3, we look for reason to go short. Okay, so 1350 had not crossed, so it hadn't locked the peak yet. But if you look at the peak, I think we talked about this in the pre-market. Here's one leg and here's the M. So Asian move right there, boom, right? You measure from here to here, it's about 17 pips. You take the trade, here's your 30 pip move, and so on and so forth. All right, if you took it off the 1 hour chart, that's your move shift. You're like, I'm going to take the short. You take the short literally right here on this pullback, right on the water. You're closed back in the traps, you -2. Get out. Okay, from here to here was 20 something pips. You may have already moved your stop to break even, so you may have not even taken a negative trade at all. Okay. NU is also in level 3. We're looking for a reason to go short. Absolutely ugly. That's why in the pre-market I was telling you guys that trading this area is not my favorite trade. Why? It is not a 12, 21, or 22. That means this whole structure has to happen in this blue tracer, which it is not. It's above it. So this is not my favorite trade. It's not a 12, 21, or 22. Okay? NJ. Now NJ, I was looking for level 2 to go short, and it was just a mess, so we're not even going to look at it. It looks terrible. All right? Dollar Swiss. Okay, so we were looking at this pin bar. We're saying price, this is where the trap volume is sitting. Price might hit the stop below this low. We drew this line at the pre-market. So we were saying that the better move is for them to create the W after hitting the stop and pulling back to hit the water. Okay, so level 2 is short, but it's a counter trend move because they did a level 1 straight away. Okay, so look, boom, closed above the 13, back below, back above. One leg out of the band, one leg in the band. So if you went long over here, that would have been the correct move. Okay, 17, 18 pips, stop goes to break even, or worst case scenario -3. Okay, again, not my favorite setups. Why? The blue tracer is here. When I draw this box for this pattern, okay, I've got to go from the apex, not the pin, just the body, to there. The blue tracer is not inside this box. First of all. Second of all, I'm in level 2, so this is a counter trend move, so I don't want to do that either. All right, just leave it alone. Dollar CAD. So dollar CAD, we were here. We were like, okay, we're looking for reasons to go long if it sets up a W, which continued dropping because of that OPEC thing. Here, let's see if there's a W. Again, it would not be my favorite setup. I would simply pass on the set. But here we go. That's why. Close above 13 below. So you're taking this trade here. 1/3, closed below, killed it, -5. Then they bust above it, taking out all the trap volume in here. And then that should have been fine. From here to your 17 pips, you'd have taken it, and you've hit your 30 pips. Easy. Okay? This part of it would become your second leg, half a bat. More than 10 pips, 15 pips, right? So this little structure right here becomes your half a bat. First leg, closed above 13, back below. This becomes your second leg, and this is the half a bat of the second leg. Boom. Okay? It's there all the time. Again, just not my favorite setup. Dollar yen. Peak formation low. This is really, really nice. Beautiful trade. Advanced W. One leg out of the band, one leg in the band. Long. It's perfect. 30 pips, easy. 15 minutes is going to look like a mess. I'm not going to go down there. Euro pound. Euro pound is the mess. We were also saying that there's only one leg. Likely they're going to come back up and give you a second leg, which they did. So over here would be a W of the male. I'm sure it's the ugliest of them all. And sure enough it is. Here's your W of the male with a half a bat. Just ugly. I won't touch it. And by the time you actually saw it, it's probably a little too late. Okay. And finally, CAD yen. Some of you guys took this trade. Okay, Cody took this trade. Level 2, 50-200 cross. Boom, they hit it, they shifted, and then you could have taken the short. Notice like a little half a bat in here. So if some of you say it closed above the 13, some of you say it didn't. If you thought this it did, then it becomes a half a bat off the male. And simply just short it from here, going down. Boom, 50 pips. Okay, 50-200 cross. You're looking for purely the pattern. You're not looking for anything else. All right, 50-200 cross, M's and W's off the male, or half a bat off the male. This one does not have a shark fin. Okay, but it confirms when the RSI line signal line crosses, which is over there. That means this one you could not have taken it over here because the RSI signal line had not crossed. You don't want to go short on a green candle, so you'll have to wait for a red candle to close. Now you got a nice angle of separation in here, and then you just short it. Boom. Trading made easy. Okay? That's it. Any questions? All right, let's start moving. I don't want to be too late. So let's Let's get started. You guys ready? Hopefully you guys can still hear me. Let me know. All right. Okay, Ray. Thanks, Leah. Good. All right. Let's, normally I start the year with a basic. I mean, if you took the 4-day course, if you took the boot camp, and if you took the charter course, charter classes, charter school, you should have the basic stuff down. Okay, so I'm going to quiz you on it, and hopefully you know them. Now, some of them are repeat questions, but I did add a couple of new ones in there. Okay? All right. And you should be able to answer these like in, I don't know, in less than 2 minutes, 30 seconds each. What are the start times of each session? What are the times of the shadow boxes? What happens during Asian accumulation? And what is the preferred size of the Asian box? All right, I'm going to give you 2 minutes and then we will look at the answers, okay? You don't have to post answers for me, okay? Some of you guys will take screenshots of this and answer it, or some of you just will write the answer, just write, 1, 2, 3, 4 page, first set of questions. There are 4 sets of questions, okay? The 4 questions in each set. So there'll be 16 questions altogether, okay? All right. What are the start times of each session? The Asian session starts at 8:30 p.m. Eastern, all the based on Eastern because Steve's on the Eastern Seaboard, as well as Doug and Jim and Joe and everybody else. 8:30 p.m. Eastern. London starts at 3:30, and the U.S. session starts at 9:30. Okay. What are the times of the shadow box? The little box is called the shadow box where the Brinks candles are. Okay. So London is from 3 to 4, and the U.S. is from 9 to 10. Okay. This is where you should be trading. Most of the setups are usually a little bit before, a little bit after. Okay. What happens during Asian accumulation? So the market makers set the initial high and low of the session. All right. They do something called circular trading to chop the market within a certain price point and collect contract. So they're trading between each other, buddies. All right. And then they will exploit these numbers at the start of the London. That means they'll widen the swing, and then they'll proceed with the trend run after hitting the stops. All right. We see that all the time. What is the preferred size of the Asian box? The preferred size of the Asian box is 50 pips or less. Remember, Asian box 50 pips or less, the Asian accumulation. Okay, this is to recognize the consolidation during the Asian accumulation. If the Asian box is too large, the trend run could have happened in Asia and the London session could be choppy. All right. All right, so this is a quick recap of the timings. All right, 5 p.m. the initial high and initial low is reset. They'll reset the highs and lows. The market maker spread is set. Between 5 and 8 is the dead gap. So it's kind of just setting up for Asia. Then the Asian session starts at 8:30 after the handover. Okay, so they come in, they look at the thing, 8:30 they start, 3. Then there's a gap where the market makers kind of tell each other, hey, this is what I'm doing, blah, 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 between 3 and 3:30. Then the London session starts at 3:30 to 9. And then the London guy tells the New York guy, hey, this is what I did. And then from there, they go to 5. Okay. All right. Next set of questions. When do we see the trap moves of the market maker? When do we see the trap moves of the market maker? When is the Brinks candle trade? All right. So when Steve talked about Brinks, what time candle is that? Where should you put your stop loss? Okay. Your normal stop loss as well as the aggressive stop loss. And what is the preferred size of a shift candle? All right, so when the market makers shift the zone with a shift candle, what side of the candle would you like to see? Hopefully not a 5-pip candle. All right, I'm going to give you guys a minute, and then we will move forward from there. Okay. When do we see the trap moves of the market maker? All right, the trap moves they made, remember, the beginning of the week, Sunday, Monday. That's why Steve doesn't like to trade Sunday, Mondays. Beginning of the day, beginning of the session, end of the session, end of the day, end of the week, and beginning of the candle. Okay? They do the false move in the beginning of the week, beginning of the day, beginning of the session, beginning of the candle. That's why you have that wick, the high test candle, the ZRT, the zone retest. That's what that is. Okay? When is the Brinks straight candle? In the London session is 3:45 a.m. Eastern candle, and in the US session is 9:45 Eastern candle. That should be easy. This is a very famous question. Everybody asks me, where you put your stop? Where you put your stop? I'm going to tell you. That's why it's part of the basic question. Your natural stop loss should sit 7 pips above or below the high of day or low of day anchor formation, anchor pattern. Okay? Your aggressive stop loss should sit literally 5 pips above the shift candle. So if I'm taking a trade on the second leg and it's railroad tracks, my stop is going to be 5 pips above the railroad track, not above the first leg. Okay? So if my first leg is I don't know, really, so if this is my first leg is like this, and my second leg is like this, okay? And these are railroad tracks, my stop is going to sit 5 pips above the railroad track here. not 5 pips above here. All right, why? Because if these are true shift candle, like Steve said, the market makers are not going to move the whole market just to come get you. Okay, they're just going to continue moving down. What is the preferred size of a shift candle? Okay, so depending on the ADR of a pair, the size of the shift candle will vary. So for example, larger ADR pairs, which is 100 pips or more, the shift candles are 15 pips or more. The lower ADR pairs, all right, 99 pips or less, like your dollar CAD or whatever the Aussie dollar, the shift candles are about 10 pips, 12 pips, sometimes even 15 pips. But they are a little bit smaller. They're 10 pips or more. Okay, so it doesn't always have to be 15 pips. It's all based on ADR. If the ADR is higher, the shift candle got to be at least 15 pips, like a GA or a GN. Okay, sometimes an Aussie dollar or Euro dollar has an 89 pip ADR. You're not going to get a 15 pip shift candle. You sometimes get 10 or 12 pip shift candle. Okay. All right, next set of questions. What time should you stop trading in the New York session? I changed that a little bit. Okay. Which currency pairs usually move in which trading session? A lot of people have been asking me these questions. Well, what should I trade? I only want to trade Asia and London. Okay. Which currency pairs usually move in which trading session? What are the 3 primary objectives of the market maker? And how do you know you're at a peak formation high or peak formation low? All right, 1 minute. All right. You probably didn't get to, maybe you got up to here, maybe you didn't get to over here, because this is a pretty big answer. Okay. What time should you stop trading the New York session? I would say, before I used to say 11 by 12:30 should be done. Let's say 1 o'clock. All right. New York reversals are between 11 to 1. So from around like 10 to 1, but 11 o'clock is when the London market closes. So the London market session closes at 11, and then after that the volume starts drying up and the market tends to chop. Okay, so you should stop trading definitely by 1 o'clock. Exactly, 11 o'clock is tea time. That's exactly why I gave you an extra 2 hours, David. Okay. Which currency pairs usually move in which trading session? All right. For those people who are new, make sure you know this stuff. Asian session, obviously, when the Asian markets are open. So you have JPY, AUD, and New Zealand. London, you have Euro, Pound, and Swiss. US session, you have USD and CAD, which moves with oil. So the major and those crosses will move at the various sessions. So the major and the crosses are going to move at those sessions. All right, so that's why if you notice, if they're moving euro long and euro strong, and that means euro dollar will move in the same direction as euro yen, and all the euro, they're going to move in the same direction because moving euro. All right, with the dollar market being closed, the Japanese market and the New Zealand Aussie market is still open. But with these being closed, and if they're moving these, right, euro dollar and euro CAD will likely move in the same direction because these markets are closed, they're not influenced. That's how you use the currency strength. You look at the currency strength, you're like, oh, dollar and CAD seems to be almost at the same par. They're not very strong. They're not moving those pairs. They're moving euro. Oh, did I mess it up? Yeah, it's GBP. That's a typo. All right, this is GBP, not JPY. GPY, that's wrong. My bad. Euro, pound, and Swiss. Doesn't GU move in London? Yes, because the dollar, the USD market is not open, right? And if they're moving pound, GU will move in London. These are just the majors. I'm talking about pound by itself, Swiss C by itself, euro by itself. I'm not talking about pound dollar, euro dollar. I'm just saying all the pounds, all the pound crosses. Okay. What are the primary objectives of the market makers? Okay, so these are the objectives. They induce traders to take positions, wide range swings, circular trading, right? The second objective is to create panic and fear to get you to think irrationally. Big moves, spike candles, news. Oh, the CAD's moving, let's jump in short. Okay. And the last thing is to hit the stop, clear the board, and force you into margin trouble. Yeah, that's their job. That's their objective. That's what they are very good at doing. How do you know you're at the peak formation? Really simple. 2.5 to 5 days of rise or drop. 3 times the ADR on average. Sometimes it goes more. Look for consolidations. Remember those Asian boxes? You're going to find 3 to 4 Asian boxes stacked on top of each other. 3 to 4 consolidations during the move. Level 3, you're going to find the EMAs all fanned out. Moving into level 3, you're going to find vector to create the outside structure, the anchor formation, the first leg of a larger structure. TDI is going to be overbought or oversold. You're going to find a reversal pattern at the peak, harmonic pattern at the confluence. Okay, that's how you know you're at a peak formation. Because most people are like, well, how do I know I'm at the peak? This is how you know it. So from one peak to the next peak, this is what normally happens. Okay, in between one peak to the other peak are levels. It's like steps going from first floor to a second floor. Just think of there are 3 steps going from one floor to the other floor. Happen to live in a split level. Okay. All right. Last set of questions. When the market is at the peak formation high, what is the net position of the market maker? What are your reversal setups in level 3? Remember, setups, not patterns, okay? After your anchor pattern, what is the first setup you should be looking for? What are your anchor setups in each level? Okay, each level has an anchor. What are they? All right? I'll wait for your answers. All right, you guys ready? Cool. When the market is at the peak formation high, what is the net position of the market maker? So always remember the market makers always take the other side of your trade, right? You're buying, they're selling. So if you're buying, the market makers are selling to you. So after 3 to 5 days of rise, and the market makers have been selling to the buyers, they're selling, they're net short. So the market makers will have to drop the markets to book a profit, because remember, they're in the business to make money. They're also in the business to take your money. So that means if they're always taking the other side of your trade, when the market starts rising for a long time, they have to drop the market to make money. Okay? What are your reversal setups in level 3? Not patterns, setups. 12, 21, 22 trade setup. That's on the 15-minute chart. 33 trade setup. That's on the 15-minute chart. Okay? And then, of course, we look at the 1 hour, multi-day M/W structures. Head and shoulders and half a bat. Okay? So, after your anchor formation, what is the first setup you should be looking for? So, for example, intra-day, after I get my 12, 21, or 22 setups, the first thing I'll be looking for is the 50-50 bounce of the ID50. Okay? So it's kind of like a roadmap. Okay, so once I got my anchor, boom, I know what I'm looking for next. It's like when you're driving, you're like, I'm going to hang a left 3 lights from now, so you know what you're looking for. Not drive to this intersection, be like, what's the name of that road again? I don't remember. Right? Obviously, if it goes 180R, you're looking for a safety trade AFP, okay, as well as a 1 hour 50-50 bounce. All right? So that leads me to the next question is, what are your anchor setups in each level? All right, so in level 3, your anchor is 12, 21, 22. Level 1, you're looking for a safety and a potential 1 hour 50-50 bounce. And in level 2, you're looking for a M/W off the Mayo or shark fin hold the Mayo. All right, these are your anchors. And this is what you look for after the anchor. Roadmap. Okay? All right, we're done. Great achievement is usually born of great sacrifice and is never the result of selfishness. Okay? It takes a lot to learn this stuff, but you guys are at the right place. You've sacrificed a lot to be here. We know that. We appreciate it. We are here to help you guys out, give you as much information. The only thing we can't help you is when you're taking that trade, even though we can tell you how to manage the trade, we can't tell you exactly how to get in, how to get out of that trade. Okay? Because we can tell you you're supposed to kill the trade when it closes above the 13, but most of you guys don't do it. So we can't help you with that part of it. If you don't do something, we can't help you with that. All right? But we're here together. We're going to make 2017 a year to remember. Okay. Have a great night. Thank you very much. David, great. Randall, Tim, excellent. I'll see you guys tomorrow at the pre-market. Have a good night. Take care. Ciao.